Assalamualaikum to Dr. Fidatul Zakimi. We are from Group B. We will present about the Mfrs 102 inventories for this comprehensive case 1.
Assalamualaikum and hi, my name is Nurul Shahira binti Abdullah and metric number is 273458 and I am going to present about the summary of MFRS 102 which is related to inventories. The first point is about the objective. The objective of this standard to explain the detail about the accounting treatment towards the inventories, which is the main issue of the accounting inventories, is about the amount of cost that will be recognized as an asset and carried forward until the related revenue will be recognized. Let's move to the second point, which is about the definition of inventories. The inventories can be defined in three situations, which is the first is asset that held for sale, or the second is asset in the process of production for such sales, or the third is asset in form of material or supplies in the production process or rendering the services. For the third point in this discussion is the standard also explain that all inventory will be covered under this standard, exclude for the two items, which is the first is about the financial instrument, which is it will be discussed in the MFRS 9, which is related to the financial instrument, and MFRS 132 will be covered the presentation of financial instrument. Another item that will be excluded from this standard is the agricultural of the activities or agricultural of the produce in the stage of the harvest, because it will be discussed in the MFRS 141, which is related to the agriculture. Let's move to the next point, which is about the measurement. The inventory will be measured at the level of cost and net realizable value. And this standard also explains the cost that will be included as in the cost of inventory, and the cost that will be excluded from the cost of inventory, which is the example for the cost that will be included in the cost of inventory is the purchase cost, conversion cost, and the bringing cost to the present location or present condition. For example, the cost for design for the specific customer. And for the example of the cost that will be excluded from the cost of inventory is about the cost of storage costs, unless it was necessary for the production process before the further production stage. Or another example is about the selling cost, which will be recognized as expense. In another situation, which is when the inventories is sold, the carrying amount will be recognized as expense same period when the revenue will be recognized. And the and another cost that has been explained from this standard is include of cost of write down of inventories or losses when the inventories have been sold. And last but not least, for the disclosure, this standard also lists all the items that should be disclosed by the financial statement, such as the policy that used to measuring the inventories. I think that's all from me, and I will pass to the next presenter. Thank you.
Assalamualaikum and hi, my name is Farah Yusufa binti Manor, metric number 272953. I will present about the three theories that explain the development of the MFRS 102 inventories. The three theories that explains the development of the MFRS 102 inventories are the normative accounting theory, positive accounting theory, and the regulations theory. For the normative accounting theory, it's about the perspective. It's based on the analytical and empirical propositions. The primary issue in accounting for the inventories is the amount of cost to be recognized as an asset and carried forward until the related revenue are recognized. Business with the seasonal or expiring inventories may need to consider if a write-down for obsolescence or slow-moving stock. Next, for the positive accounting theory, is based on the experience or fact of the real world and explains the reason for the current practice. For the example, during the COVID-19 pandemic, other business than seasonal and expiring inventories may need to determine whether a drop in the future estimate selling price is likely. And the last one, for the regulations theory, it explains why some accounting perceptions become part of the legislations while others do not. The MFRS 102 inventories applies to all inventories except for the financial instruments, biological assets related to agriculture activities, and the agricultural produce at the point of the harvest. For the examples, during the COVID-19 pandemic, the net realizable value (NRV) of an asset item of inventory may fall below its cost because of the variety of factors. Next, I present about the main practice that involve in development or formulation of the MFRS 102 inventories. There are four main practices that involve in the development or formulation of the MFRS 102 inventories. The first practice is MASB, Malaysian Accounting Standard Board. It produces and promotes the high-value accounting and financial reporting standard. Is aligned with international best practice for the benefit of users, preparers, auditors, and the general public in Malaysia. The second one is issue committee. It represents from the commerce, accounting professions, academia, as well as analysis. It helps the MASP to ensure and promote high-quality accounting procedure throughout the country. The third one is Securities Commissions. It regulates all aspects of securities in Malaysia, including the issue, offer, and listing of securities. It also ensures a fair, efficient, and secure securities and their derivative market. And the last one is the Bank Negara Malaysia (BNN). Its responsibility to maintain the monetary and financial system stable. It issues a guideline on banking and financial institution financial reporting practice.
Assalamualaikum and hi, my name is Nur Idin Izzati and I will be presenting the basis used to verify MFRS 102 and the nature of MFRS 102. The inventory accounting treatment prescribed by MFRS 102 inventories is based on the historical cost system. In general, there are three types of basis for theory verification, which is dogmatic basis, self-evident basis, and scientific basis. First and foremost, the dogmatic basis is used to validate the MFRS 102 inventories. Dogmatic basis is a basis on which we believe claims made by others simply because they have been stated by the authority. In this case, the dogmatic basis is employed because MFRS 102 was issued by the authority bodies in Malaysia, which is Malaysian Accounting Standards Board (MASB) in November 2011. Consequently, this signifies that they accept the statement that has been made by the authorities as well as the legality of all of the regulations and procedures. Aside from that, MFRS 102 inventories were also verified on the basis of self-evidence. Self-evident basis is the reasonableness of a statement based on our general knowledge, experience, and observation. According to the standard, inventories should be valued at the lower of the cost or the net realizable value. These estimates take into account price or cost fluctuations that are directly related to events that occur after the end of the period. As a result, it can be seen that some of the decisions made by MFRS 102 are based on concepts that are commonly accepted and used in practice. Besides, we can also relate with COVID-19, which may have had an impact on the recoverability of inventory stock. Companies should evaluate whether a write-down for obsolescence or slow-moving inventory is required as a result of the lack of sales in this situation. Additionally, companies will also have to evaluate the measurement of the inventories at the lower of their cost and net realizable value if there is a possibility of a decline in the selling price. Thus, this also shows that MFRS 102 is using dogmatic basis and self-evident basis, as this accounting treatment is made by the authority and the suggested treatment is based on knowledge, experience, and observation. Next, I will continue my presentation with the nature of MFRS 102 inventories. The MASB converged the accounting standards from IASB 2 based on principle based in MFRS 102 inventories. Previously, the objectives of MFRS 102 inventories and IAS 2 were similar to those of the United States GAAP, which is a historical cost system. However, the International Accounting Standards Board IASB changed their objectives to be the amount of cost inventories to be recognized as an asset and carried forward until the related revenue are recognized. As a result of these changes, the term historical cost system has been eliminated to make it clear that the standard applies to all inventories that are not specifically excluded from its scope. As stated in the standard, first in first out FIFO and weighted average cost formula are the only costing methods available for inventories, and the usage of method last in first out has been prohibited since the board believes that this method does not accurately reflect the right flow of inventory. Due to the prohibition of this approach, the MASB obeyed IFRS since under IFRS, LIFO is prohibited because the focus of IFRS changed away from the income statement to the balance sheet. There are some exceptions to the application of the standard for subsequent measurement under MFRS 102, such as producers of agricultural and forest products, agricultural produce after harvest, and some other more. This product cannot be used in inventory since any changes will be reflected in the profit and loss statements for the period during which the change occurs. In conclusion, we can see that the MASB has been following and reviewing the International Financial Reporting Standard IFRS since the commencement of its establishment of the MFRS 102 standard. Therefore, this shows that MASB uses a principle-based system as they adjust accounting principles to a company's transactions rather than adjusting a company's operations to accounting rules. Now, I will pass to the next presenter to continue this presentation. Thank you.
Assalamualaikum. My name is Nurul Syahira Elina binti Muhammad Zakaria and my metric number is 273461. Next, I will continue the presentation about the limitations of MFRS 102 inventories. Accounting standards and rules have become too numerous and have resulted in negative impact on users. These are some limitations that has been found in MFRS 102 inventories. The first one is difficult in identify the treatment for discounting. To determine the cost of purchase, MFRS 102 required that the trade discount, rebates, and other similar items are deducted from the cost of purchase. Based on Malaysian Accounting Standard Board, when it comes to the settlement of discount, the board has not specified in detail the treatment that will be used to determine the amount of discount in inventories. As a result, it made it difficult for the user to determine which treatment to use for discounting. Next, hard to figure out current market value for the harvest agriculture. MFRS 102 places restriction on the ability to measure all types of inventory. This is due to the fact that MFRS 102 can apply to all inventory with the exception of biological asset related to the agriculture activity and agricultural produce at the point of harvest. This is because MFRS 102 measure inventory at the lower of cost and net realizable value, where agriculture produce at the point of harvest is measured at fair value less cost to sell, in order to determine the market value. Accordingly, current market value of certain inventories cannot be measured using the MFRS 102 inventory. After that, the limitation of MFRS 102 is difference in the net realizable value determined for inventories to analyze impairment and the fair value. Net realizable value refers to the net amount expected to be earned by an entity from the sale of inventory in the ordinary course of business. Fair value describes the amount by which the same inventory can be exchanged between buyers and sellers who are knowledgeable and willing in the marketplace. That means fair value less cost to sell and net realizable value for inventory is not equal to each other. Finally is the exemption of abnormal amount of waste materials and labor, storage costs and selling costs as a part of cost of inventories. MFRS 102 states that abnormal amount of waste material and labor, storage costs and selling costs are not included as a part of cost of inventories. But due to COVID-19, an entity may have inventories rendered obsolete. For example, if the business had to close or reduce their operation, especially if stocks are easily damaged, or if inventory is kept in an inaccessible location as a result of the outbreak. Obsolete inventory should be written down to its net realizable value, which is currently lower than the cost. Inventory should be measured at a lower cost and net realizable value. If the selling price falls and the cost to complete and sell increase, inventory may need to be written down. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ainus Namdi Hussein. My metric number 273169. So I will present about suggestion or recommendation to overcome the limitation of MFRS 102. So for the first one, the inventory purchase should be stated net of any available discount. The accounting for estimate discount is not defined in MFRS 102. The IFRIC does not provide guidance on accounting for accurate discount in calculation. It is a good idea to record the amount of inventory purchase where the vendor is offering the expected discount minus any available discount. According to this view, if the buyer does not receive a discount, the extra payment is documented as a finance fee. This is because the discount estimate is in fact a financial procedure and must be described for at its fair value on initial recognition. The amount recognized for the related liability must not exceed the total that would have been paid to settle the liability. In the lacking of authoritative advice, we believe it is also possible to keep inventory record of actual payment, excluding expected discount that were available but not received. Next, market value must be defined in its broadest meaning, taking into account current market pricing for equivalent or similar goods. Market value is the worth of a company as measured by the stock market. This is the price the asset receives in the market. In the context of economy, market value equals market capitalization. Market value is present and calculated in accordance with valuation standard and accounting standard. Even if there is no provision for pricing update, including the contract, there is no significant risk the contract price become out of date because of the market high inventory turnover. Market information used represent the most reliable information at the time of measuring of event after the end of accounting period, providing there is support existing condition at the end of the accounting period. Next, consider the historical cost, market value, replacement cost, and actualization value. Inventory are valued at the lower cost and net realizable value. Net realizable value, which is on the basis of market value, or in rare case, replacement cost, is equal to its fair value, including any necessary deduction that may arise under certain assumption where valuing inventory. Historical cost accounting is easy to understand because it's always based on fully known set price. That is the real amount paid by the firm. The market value of an inventory is essentially the replacement value of that inventory, or the amount it takes to replace the inventory on the open market. Replacement costs are used to calculate how much the company will spend on restocking an item after it has been sold, or if it is found unstable for sale while it is in stock. The market value is used to ensure that there is sufficient inventory to support the expected sales volume for the next sales period. To distinguish the real fair value, the accounting standards are determined for an entire inventory categories representing net realizable value, and for a specific inventory such as biological asset. So I think that's all from our group. Thank you.